Welcome to the Insurance and Money Podcast. We're here to educate on the topics of insurance and money. I'm your host, Karla Howard. I want to thank you for tuning into the show today. On this show, you can expect to learn about the different types of insurance and how they relate and apply to you. Also, we will discuss your money as well, such as checking and savings accounts, credit cards, and mortgages. On our last episode, we talked about an emergency fund and how it fits into your financial plan. We're continuing that discussion today in greater detail. So today's topic is emergency funds versus cash value. What's the difference? You must address this topic in more great detail. I heard a woman say, I'll never buy term insurance because it doesn't have cash value. What if I need a couple dollars to handle a bill, go out to dinner, and I just need some money in my pocket? Isn't that what's cash value being used for? I need to access money, and cash value offers that, right? Well, no, that's not correct. I want to change that mindset. Let's remember knowledge is power, and wisdom on how to use that power is greatly important. Let's get started with the emergency fund. It's usually kept in a savings or account. Sometimes the people put it in a checking account. I like to recommend not using a brick and mortar, a bank that you have access to too quickly. Maybe use an online bank account. There are plenty of them out there because number one, they'll have, in most cases, a higher interest rate that they'll offer than a brick and mortar account because the obvious, there's not a whole lot of people working. It's not rent to pay the building. You still have access to it in a quick time frame. So that's a really good place to keep your emergency fund. And that's easy to access. You could get the money the next day, sometimes the same day. The rule of thumb is you want to have 3 to 6 months of living expenses saved up. So the purpose here is short-term safety. It keeps you from having to swipe a credit card or dip into funds when life happens, because guess what? As long as you're living, life is going to happen. So an emergency fund is going to be your first line of defense. Now let's switch gears for a moment to insurance cash value. In previous episodes, we discussed cash value, and we're resuming that discussion here today. This is a feature you'll find in permanent life insurance policies, such as whole life and universal life insurance. And here's how it works. When you pay your premium, part of your premium goes toward the cost of insurance, and the other part goes into your cash value account. That account grows over time, often tax deferred, and in many cases, there are guarantees. Over the years, you can borrow against it or even withdraw from it. This is where people start to think, well, why not use it as my emergency fund? No, here's the difference. Cash value can take years to grow to the level that you need it to be to use an emergency fund. And in the early stages of the policy, there may not be much to access. So you have to also consider borrowing isn't free. You do need to pay it back with interest so that when death occurs, the loan is not subtracted from your death benefit. And it's not instant. You can't just take a debit card. You can't just get it as quick as you can if you had it in a savings or checking account, because there's paperwork involved and there's processing involved. And a lot of times the insurance company is not going to send you an email, make it really fast. They'll mail you the forms for you to fill out information and to access your cash value. So while cash value is valuable, it's designed as a long-term tool, and it's not a quick safety net. So let's do a side-by-side comparison. We're going to compare purpose, access, growth, impact. So purpose. An emergency fund equals short-term peace of mind. And a cash value equals long-term wealth building. For access, an emergency fund equals instant. Cash value equals slower with rules attached. Growth, an emergency fund, low or no interest, but safe and liquid, meaning you can access it. Cash value equals potential growth, but not always accessible in the short run. And impact, using your emergency fund equals no string attached, while cash value equals it affects your policy and your death benefit. Let's think of it like this. Your emergency fund is like the fire extinguisher in your kitchen. It's quick, it's simple, it's ready to grab. Your cash value is more like an insurance policy on your home. Great, powerful protection, but not the tool you're going to grab when your dinner on your stove catches fire. The truth is, you don't have to choose between them. Isn't that awesome? Because they complement each other. Start building your emergency fund. Let's start there because that's your day-to-day protection. And really, we all know life happens. You could have a flat tire. There's so many things that can happen. A bill that you forgot about is due in a couple days. Your daughter has issues at school that require funding or a class trip or something to that effect. There could be an accident and you need money to be able to make it through when you don't have, when there's an accident and you can't get to work. So an emergency fund is huge because it helps in life and you don't have to always get credit and start bills that you're going to have issues paying back. And building cash value is a part of a bigger financial picture. One handles the short-term bumps in life's challenges, the other long-term goals like retirement, legacy planning, or business opportunities. So to wrap it up, an emergency fund and insurance cash value are both important. However, they are not the same thing. One's liquid, instant, and built for the short-term emergencies, and the other grows slowly, works over decades, and can become a powerful, but it's not meant to replace an emergency fund. Please keep that in mind. It's not meant to replace an emergency fund. We've shown through the episodes shared knowledge on all things insurance, different types of insurance, life insurance, home insurance. And if you haven't taken the time to get your insurance plan in place and you would like to get it in place, or maybe even have what you have analyzed, send me an email at khoward.insgroup@gmail.com if you're in the Pennsylvania or Delaware states. Thank you for tuning into the show today. Please tune in every Wednesday at 7 p.m. and we will continue our discussion on insurance and money issues. I have examples and tips to share. This is Karla signing out until next week.